You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Bitcoin, Ether, Ripple, Litecoin, and more. Cryptocurrencies and other digital assets are taking the financial world by storm. This exploding market provides everything a savvy trader needs: volatility, volume, and liquidity. Provided you know how to find it. That's where we come in. Welcome to the Crypto Rundown. Each week, we'll break down the latest trading activity, trends, and developments on everything from coins to tokens, futures, and even OTC options. If it's moving the crypto markets, then you'll find it on the Crypto Rundown. This program is brought to you by Genesis Volatility, also known as GVol, home of institutional-grade crypto options analytics. Whether you're trading CeFi options or DeFi options, cryptocurrencies move. Use GVol Analytics to analyze implied volatility, model realized volatility, structure positions, and unlock alpha. For more information, visit gvol.io. That's GVOL.io. Now it's time to dive into the exploding world of cryptocurrencies and digital assets. It's time for the Crypto Rundown.
All right, everybody. That music means it is time once again for the Crypto Rundown, the program here on the Options Insider Radio Network, where we explore new territory. We move beyond our traditional stomping grounds of your VIX, Apple, and Tesla and SPY options. Look a little bit further afield, see what's lighting things up over there in the crypto market. Spoiler alert, a lot going on out there today. We have a lot to sink our teeth into today. My name, of course, Mark Longo from theoptionsinsider.com, as well as, of course, from the aforementioned network. Again, reminding you, coming off the hottest month in the history, the 15-plus year history of the network. Crypto Rundown, no small part of that growth story. So if you like what you hear, you're one of the many on-demand listeners. All we ask is you keep rating and reviewing. You know, we have 15 plus years of reviews, you might say, but you could clearly argue that the more recent ones are definitely the most impactful. So get out there. A lot of new people are discovering these markets literally every day. So head on over to wherever you're listening on the on-demand side. Keep rating and reviewing. And of course, if you want to go above and beyond, you want to join us for our exclusive content the rest of the network doesn't get, like our pro Q&As and our options oddities, or you want to join us for whatever show you want live throughout the week, they'll all be available to you and a whole bunch more. theoptionsinsider.com/pro is the place to go to learn more. As we keep on rolling, listeners, it is time to roll out the Crypto Hot Seat.
Forget about cold storage. It's time to turn up the heat on thought leaders from the world of cryptocurrencies and digital assets. It's time to take their place on the Crypto Hot Seat.
All right, everybody, welcome to the Crypto Hot Seat, the portion of the show where we welcome on guests from throughout the world of crypto derivatives and indeed beyond, and proceed to pick their brains for the benefit of you, the listener. Next up in the hot seat is a newcomer to the program and indeed to the network. He is Ivan Zhang, the CEO and co-founder of PennyWorks. Ivan, welcome to the Crypto Rundown program.
Thanks for having me, Mark. Pleasure to be here.
And Ivan, as we are wont to do with all of our first-timers here on the network, why don't you go ahead and give our audience a bit of an overview of your background in the financial space, as well as what it is you folks do over there at PennyWorks.
Sure. So I actually have a background that's quite similar to you. I started as a fixed income options derivatives trader and portfolio manager at Bank of America for almost over a decade. So we were focusing on managing the bank's excess liquidity portfolio, which at the time was about 400 and 500 billion dollars in U.S. Treasuries and mortgage-backed securities. I then moved into DRW, which is a proprietary trading firm, and did a variety of things there, including fixed income options systematic trading and delta execution for the fixed options desk. So over that period of time, we were looking at the crypto and development and ecosystem. DeFi was only a little kind of a small development in early 2020, between that beginning of the year till the end of the year, it's grown for well over almost $100 billion. So we thought that this was the time for us to give it a shot and start PennyWorks. And so what is PennyWorks? PennyWorks is an investment platform that takes the work out of investing DeFi. Our first product is a high yield interest account. It's powered by digital asset lending, and it currently offers yields in the range of 5 to 8% APY. There's no crypto involved for the investor. You purchase a private note using dollars, but when you want money back, you redeem the notes, send the cash back to you by ACH or wire. That's simple. You get it at 1099 in a year. You don't have to manage crypto wallets. You don't have to parse the blockchain into crypto taxes. It's that simple. At the moment, we have launched for U.S. accredited investors, individuals and businesses only, and we support U.S. dollar investments. But we were responsive to our users and looking into crypto options in the future.
I like to hear it. You're speaking my language here, the crypto options, Ivan. But before we get there, we've had a lot of guests come on the network which have backgrounds similar to yours, somewhere in the world, in the realm of traditional finance. And then they have that moment, that inflection point, that awakening that made them say, maybe there's something more to these crypto markets that made them really devote themselves full time to the crypto space and away from the realm of traditional finance. What was that moment, that inflection point for you there, Ivan?
I got to tell you, I think we've taken an approach that was a lot more methodical than most people in the space. We first encountered crypto since 2013 and started trading it, which is a pretty no-brainer given that we have a trading background. And then in early 2015, 2016, you saw the development of Ethereum. And that was the moment where it really said, clicked for me. I was like, wow, okay, Bitcoin, you can transfer value across the globe permissionlessly. It's pretty amazing. But with smart contracts on Ethereum, you can basically digitize most of all the financial activities onto the blockchain and have the same kind of capabilities. But in order for us to get involved in full time, we said, well, is the ecosystem ready yet? And at that time, we thought that, hey, look, there was the 2017 ICO craze. Tons of new projects coming up. You read some of these white papers. A lot of them are focused on finance and technology. And I'm a pretty savvy technology and finance person myself, and I couldn't understand half of it. So we took a long, hard look about it, and we said, hey, look, instead of actually going full time and doing one of these crazy ICO projects, why don't we start a crypto mining facility? We'll learn about the tech. We'll learn about the financial dynamics of mining. We'll also be able to, build some machines and see how that works. And so we actually specialized in crypto mining for Ethereum in 2016, and that's been running for the better part of 6 years now. And we remember when we first started running it, we said, hey, look, Ethereum is going to change from proof of work, which is the system that they're using now to create blocks, to proof of stake, probably in a year. So this is only going to be a little fun side project that's not going to last that long. And lo and behold, it's been 6 years since we've been doing this, and Ethereum is still on the proof of work protocol. And so once we did that, we created a facility, started with a couple dozen machines. We were calling up Best Buys to buy their their graphics cards. And after we bought a few of them or a dozen, the Best Buy rep says, hey, look, we can't sell to you guys anymore. I'm like, what? And they were like, well, we can't sell to wholesalers. And we said, well, we're not a wholesaler. So, well, how do you explain you buying like these dozens or hundreds of graphics cards from us? I was like, well, we're doing crypto mining. And at that time, obviously, the rep had no idea what we're talking about. I said, hey, look, I'll show you some pictures. And we have all these boxes of GPU boxes stacked high to the ceiling and the machines that we custom built. And so that's kind of how we started the journey. And then in 2019, when DeFi was finally starting with MakerDAO, that's when you kind of got the opportunity to do decentralized lending, collateralized lending, and be in the fixed income space, be knowledgeable about crypto, be knowledgeable about finance. We said, hey, look, this is the opportunity that's literally made for us. If we don't do this, I don't know what else we should be doing. And that's how we got into PennyWorks.
Well, let's get into what you're doing. You're taking a little bit of a different approach. You've had a lot of guests come on with a lot of different offerings in a very crowded crypto space. You guys aren't just coming to the forefront with yet another crypto exchange or crypto brokerage. Sounds like you're bringing a little bit of your old viewpoint, your old market experience into this, taking a fixed income approach and looking at it more from a yield perspective. So you touched on it a little bit at the top, but let's walk through the steps for our listeners out there. So obviously they come, they sign up for PennyWorks, and effectively they're just bringing X amount of dollars to the table, which they are then converting into stable coins, or I guess you guys are doing that for them. And that's how you're generating the yield, lending out those stable coins there, Ivan?
Exactly. Now, it doesn't sound very exciting, but Rome wasn't built in one day. So what we're trying to do is bring about a very credible alternative to a savings account. Stocks are down, bonds are down, even crypto is down. Okay, fine. Don't invest in anything, put everything in the checking account. Oh, wait, there's 8.6% inflation. So even your cash is down. So what do? We're not trying to hit the ball out of the park here. We're just trying to give you a credible alternative, bring you most of the value back from your deposits to be able to generate some yields and mitigate some of the effects of inflation.
Yeah, a lot going on out there in the crypto landscape. We'll get to all the price action a little bit later here in the show. But as you mentioned, Ivan, you're a relatively new addition to the space. You just launched back in April. So we're getting you guys pretty much a couple of months into the PennyWorks journey here. Obviously, an interesting time to launch a new endeavor based around crypto yield. Obviously, we've seen mostly aggressive sell-offs during that time. So walk us through how the last couple of months, how have they been for you guys, and what has the response been to this platform in an environment, including like today, where things are mostly red and melting down around you, sir?
So just with anything that you do, there's always a silver lining. And we actually see that this is a huge opportunity for us to really differentiate yourself. When the tide goes out, this is when you figure out who's not wearing shorts, right? And so a lot of the players in the ecosystem have done fairly aggressive kind of yield generation strategies. Some of it may be warranted, some of it not. But essentially, there was not a clear language or taxonomy to say, hey, look, what counts as DeFi, what counts as lending, what counts as trading, what counts as market making, and so on and so forth, right? And so what we're trying to say is that, hey, look, there is still a huge, huge disparity between the amount of excess capital in traditional financial system, 17 trillion or plus in deposits in the United States banking system. In the, Europe, there's, trillions of dollars of still negatively yielding debt. And even treasuries, people were excited about 3% recently, but, that's still like tens of trillions of dollars are yielding less than 3%. But, in order for you to get that yield, you're taking 10-year treasuries, duration risk. And so what we're trying to do is build the first component out there that says, hey, look, this is the most vanilla product. The first building block essentially is giving you the value that the bank account should have given you, but unfortunately banks are not, right? So Fed hiked 50 basis points a few weeks ago. Most banks didn't come out and announce, hey, look, we're going to raise your checking account rates by 50 basis points to match. No one's done that. So what we're trying to do is say, look, simplify the entire process. DeFi definitely has a huge appeal. But at the beginning, just like the internet, people had to buy a modem. Like, what's a modem? And then when you use your internet, it blocks the phone line. It's a terrible, terrible user experience. But in spite of this, the internet has grown to essentially what we have today. Some might consider the internet almost like a fundamental human right. And what we're trying to do is basically bridging the gap. What are all the traditional users that have excess capital? And what are all the DeFi platforms that need that capital? And we're connecting them in a way that doesn't force people to say, hey, look, now I got to learn a whole new way to operate. You have to learn how to buy a crypto wallet. You have to learn how to read smart contracts, right? We're trying to simplify that process for you and give most of the value back to you.
Yes, just to clarify then, there are no wallets involved in what you're doing or anything like that. Someone just comes to you with, I'm assuming there's some minimum amount to invest there, Ivan. And then from then on, it's all on your end and you're just delivering the yield to them.
Exactly. Because we're a credit investor platform only at this moment, the minimum funding amount is $25,000. But once you do put $25,000 in, incrementally, you could add like $50, $100, whatever you see fit. We want this to be a credible alternative to savings accounts, but we're very clear that this is not FDIC insured. We're not a bank. You're investing in private debt securities, and in exchange, you're getting that relatively high yield with good liquidity dynamics.
Well, we talked about the sell-off, but as you kind of just alluded to, the other challenge for any sort of yield platform right now is what we're seeing out there with the Fed cranking up rates, or soon to be, we expect again this week. Inflation coming in recently at 6%. If you had come out a year ago and announced a platform with 8% yield on crypto, people would have been probably super enamored with that idea. But fast forward to this year, and it may not sound as attractive. So how are you also going to keep up with the Joneses out there of the Fed and inflation and everything else that's going to maybe raise people's expectation for yield in this environment, Ivan?
Well, I think the funny thing is that I don't have to, right? As we mentioned, the Fed has raised by 50 basis points. Bank of America, Chase, nobody's actually come out and say, hey, look, we're going to match that rate hike in our checking accounts, right? And so, yes, inflation is going to be elevated, but what are you going to get in your checking account? What are you going to get in your savings account? You're not going to get something that will match it, right? And in terms of all the investments, I was at the previous conference last month with Reuters Investments. And, a lot of the CIOs says, hey, look, why are you still buying these investment securities that are only earning 2-3%? And then the short answer is just they have to. They have no other choice. What else would they do with the money? And so in terms of the competitive landscape, the way you can think about it was previously, without inflation, there was not a much opportunity cost of leaving your cash in the bank account. Inflation was 1 or 2%. You leave it in the bank account, you lose 1 or 2%. Now, what you want to think about is, hey, look, if you leave it in the bank account, you're actually losing 8.5% annualized, right? So within the span of like 4 to 5 years, you lost almost half of your value. So that's actually the loss aversion that's starting to kick in for people's mindsets. How do I make sure that I don't lose my purchasing power? And that's where our value of having something that actually could closely match or inflation numbers would provide more value than it did before when inflation was lower.
And obviously, the other half of the yield conversation, especially for crypto, especially for a day like today, Ivan, is risk. Now, you spend a lot of time on your platform talking about your low risk exposure to digital assets. You're only using stable coins as a way to generate that yield, as a way to mitigate that risk. But of course, since you've launched, we've seen some pretty high profile issues with stable coins, the algorithmic type like Luna, of course, wiping billions of dollars worth of market cap off the map. And even today, with today's sell-off, we're seeing some rumblings about some issues with Tron and having to deploy another $2 billion to prop up a stable coin like Tron. So since you've launched, there has been some heat on the stable coin space. What are your thoughts on that, and how has that impacted people coming to you and being a little bit more concerned these days about risk in stable coins versus a few months ago?
I think that's actually a great opportunity because before, when everything was going up, everyone was making money, things were great. It was hard to distinguish between a platform that kind of knew what they were doing versus somebody that kind of was just following the crowd, right? And besides, Tron recently slightly losing their peg in terms of their US stable coin. The bigger news is that Celsius is having liquidity issues, right? And so they have been a platform that's been fairly big. I think over $12 billion in assets under management. And they do a whole host of things, not including just stable coins, but also Ethereum and Bitcoin and so on and so forth. And one of the biggest things that came out of that before is that essentially they have a lot of Ethereum staked into the ETH 2.0 contract. And that's an irreversible operation. It means that there's nothing you can do to take that money out. So when they're promising those yields to their users with the opportunity to withdraw essentially at any time, but actually taking those Ethereum coins and putting them into the staking contract, that creates a massive maturity mismatch, right? So that's the same issue that most banks will have when they're taking money from the checking account deposit that you have and then lending it out to Mark, say, for their 30-year mortgage. Now, all of a sudden, if you want your money back from the checking account, the guy that took out the 30-year mortgage is not going to be able to pay it back, right? So in terms of our risk management, there's a lot of activities that we do not do. And it's hard to distinguish what those were before the blow up, but now it's pretty clear, right? So everyone's talking about some of the centralized yield providers having difficulty because of their risk management practices. People are also talking about algorithmic stablecoins because there hasn't been a proven technology, but nobody is actually talking about the lending protocols such as Aave, MakerDAO, or Compound. Why? Because these are very solid technologies that's been proven in and out. Even in the recent massive drawdowns in terms of Bitcoin and Ethereum, very few people are even talking about the liquidation mechanics that are happening on Aave, simply because that platform is over collateralized. That platform allows people to liquidate in near real time to get back their principal and interest. And very few lenders on those platforms have had any meaningful losses.
Well, in addition to the madness gripping the markets out there today, there has been a lot of fluidity in the crypto markets here in the U.S. for some time, especially when it comes to the regulatory side of the fence. Obviously, it depends where you're domiciled, where you're transacting, what type of regulatory regime you're going to come up against here in the U.S. Again, there's been some fluidity to that. We have gotten a little bit more insight as to maybe what they're planning for the crypto space going forward. I know you guys, Ivan, over there at PennyWorks, have been writing and talking about this for some time. Obviously, it's very near and dear to you guys. It impacts what you're doing day to day. What are your thoughts on some of the insights we've been gleaning on forthcoming crypto legislation, sir?
So the Loomis-Gillibrand Responsible Financial Innovation Act is what's been recently proposed as the latest crypto bill. And it's got very, very positive provisions inside the bill. Most of the provisions kind of focus on being much more clear on what is and is not a security. So to give you a little bit of context, back in the ICO days in 2017, a lot of people were launching these tokens and promising a lot of features, but haven't been established or haven't been built out fully before the launch of those tokens. And so the SEC deems most of those a security. And since they haven't been registered with the SEC, a lot of these ICOs were not compliant. Now, it just happens registering a public security is actually fairly difficult. So in fact, some of the disclosure requirements are quite costly. And so you have this gap where a lot of people are trying to bend over backwards to either be steering clear completely of SEC regulations or trying to shoehorn something that is fundamentally novel into the securities framework. So the Loomis-Gillibrand Act essentially introduces this concept of ancillary asset, and it just uses a very clear criteria. It says, hey, look, if it's sufficiently decentralized, we're going to be treating it kind of like a commodity, and it's going to be regulated by the CFTC, which is also the entity that regulates a lot of the future options and things like that. And if it is very centralized, then it's going to be closely mirroring the characteristics of a security, then it's going to be regulated on the SEC. However, even if it is going to be regulated on the SEC, they are trying to put kind of pretty straightforward annual disclosures for those digital assets so that they can be compliant without having massive burden of public securities disclosures. And so that's a very positive for the ecosystem. The second thing is more clarity on tax treatment of different activities that you do with crypto. So a lot of people complain that, hey, look, if you're an American and you buy a coffee with Bitcoin, you're going to have a taxable capital gains event because you're going to be selling $5 of Bitcoin, realizing whatever the cost basis difference is, and paying tax on it. And they're just trying to say, hey, look, we're going to have our carve out that's just going to say, if it's a de minimis amount because you're using it to buy coffee or things like that, you're not going to have to keep track of those cost bases and file those complicated tax statements for, a few $100s. And on the same tone, they also clarifying the dynamics of mining and staking. So a lot of miners generate income. You get Bitcoin placed into a block, so you get a fraction of the Bitcoin for reward. People say, well, when does it recognize as income? Now, it's kind of boring in terms of tax perspective, but it is pretty meaningful because it makes the clarity required so that people can actually plan out their capital investments so that they can say, hey, look, now I have the clarity I need to make a Bitcoin mining investment or another staking kind of venture. So those are the kind of the highlights in terms of the tax bill. There's definitely a lot more to go, but it seems that we're finally getting legislation that is more positive in the crypto ecosystem.
It would be nice to have a little bit more clarity, any clarity at this point on the regulatory and legislative side for crypto, Ivan, is a good thing.
That's right.
But Ivan, I appreciate you joining us, taking some time out of a very crazy day out there in the crypto markets to shed a little light on PennyWorks. But before we go, Ivan, we like to leave our guests wanting more. So if there's something you'd like to leave them with in terms of something to think about in the crypto space, or perhaps an interesting or a cool new feature or offering that they could look forward coming down the pike from you guys over there at PennyWorks, now is the time, sir. The floor is yours.
Yes. So PennyWorks, we just launched. We're coming up with a series of features. If you're interested in learning about us, come check us out at pennyworks.com. You can also book a live demo with a real person to walk you through the features of our platform. We're also releasing an ACH deposits straight through our app so that you don't have to go through your own bank interface. So check us out. Come and sign up. And then for the first depositors, we are actually offering a high security multi-factor key that's designed by Yubico and allows you to give it a lot more layer of security to your personal finance.
There you go. Check them out. PennyWorks.com is the place to go. Also give them a follow on the old Twitters at PennyWorks. All one word. As we keep on rolling, listeners, it's time to break down this mad day and mad week. From a crypto pricing perspective, it is time for the Bitcoin Breakdown.
It's time to explore the latest trending activity, trends, and developments across the world's leading crypto market. It's time for the Bitcoin Breakdown.
All right, everybody, welcome to the Bitcoin Breakdown, the portion of the show where we do just that. We break down all of the crazy, and it is crazy with a capital C, price action going on in the world's leading digital asset, which is, of course, Bitcoin. As always, these analytics coming at you courtesy of our friends over there at Genesis Volatility. gvol.io is the place to go to kick the tires and light the fires out there. And certainly in markets like this, you want to be forewarned, forearmed with information about volatility, about skew, about everything else to help you make informed trading decisions. So if you're not checking it out, gvol.io is the place to go right now. Post haste, definitely. If you head over there, you'll see what all these analytics we're going to break down right now. Let's start in the price action, though. And yeah, I think it's safe to say lower coming into the start of the show. We were a little bit north of 30,000 on the last show, 31,361 to be precise. Coming into the start of today's show, we were at 23,600. So that puts us down about almost 7,800 handles from where we were this time last week. As the show has progressed, as Ivan and I were chatting, we have dipped to almost breaking through 23,000. That 25,000 level, we have bounced off that before. And when we broke through that, that really gave some folks some shock to the system. In fact, this morning we got as low as 22,805. So we broke 23,000 ever so briefly out there. That I'm sure came as a shock to a lot of the crypto bulls, crypto holders out there. Let's get into the vol landscape, see how things are looking out there. Spoiler alert, it's higher. At our last show, we were at about a 60, and we were just talking about how the vol had popped a few weeks before and then had pretty much come right back into about a 60, which is, again, as we said on the show last week, not exactly super explosive volatility. Certainly not for an asset that has become synonymous in the minds of much of the broad investing public with volatility. So a 60 vol, not exactly something that is synonymous with volatility. This week, looking a little bit frothier, 109 when we kicked off the show. So not quite doubling, but pretty darn close. And that was pretty much at the apex of the movement. So that was pretty much about as high as we got during the week. Again, once we broke through 25,000, then continued to the dark side, broke through 23,000 this morning. That really seemed to have spooked a lot of people, hence this next leg higher from a vol perspective. Now, as you said before, it passed as prologue. These vol spikes in Bitcoin tend not to be long-lived. Now, if we continue this sell-off, all bets are off. But if we kind of stabilize around here, and we'll expect to see this vol come crashing back to reality by next week. Probably not back to a 60, but certainly much lower than a 109. So bear that in mind if you're coming in and just going to load up on a ton of Bitcoin options premium right now. That could be a difficult trade right now. BitVol, which is, of course, our friend Simon Ho's effectively 30-day Bitcoin VIX metric, again, reflecting something similar to what we're seeing in the average vol coming out of our friends over there at Genesis. BitVol last show, 68 and about a quarter. Coming into today's show, 99.4. So threatening triple digits there as well. So again, from a vol perspective, the answer is pretty much higher across the board. Skew now, that's a different story. When we get to the 30-20 skew, which again averages together all of the options in the 30 delta down to the 20 delta range and gives you a nice number. You're comparing, of course, the volatility in that range and the put wing versus the call wing. So when we see a demonstrably negative number like we're seeing today, that means the vol, the juice, the action, the concern, call it what you will, is all to the downside. And that's pretty much what we're seeing right now. It was a negative 6.6. So it was still pretty negative on our show last week. People were still concerned about the downside. Coming into this show, 27, negative 27. So again, that's right at the apex of the skew. So that's pretty much the highest we've been over the course of this week. I'll have to go back and check to see how it compares to in the recent last month, that big sell-off we had there as well when we broke 30K. But that's a pretty aggressive number for negative skew out there. Let's get out to the OI and see if that's reflected in the OI. Remember, I've said before, we need a protracted sell-off, and we need to kind of hang out there for a while and keep selling off to really give the puts some life and maybe have them catch up from an OI perspective, because it's been effectively 2-to-1 calls over puts forever in the Bitcoin options market. We're getting a little bit closer these days. Coming into Showtime calls, again, this is all on Deribit, which is still the big dog from a crypto derivatives perspective. The calls on Deribit, 134,000 of those open. That's up about 4,000 versus the puts, 96,000, so up about 8,000. So we're beyond that 2-to-1 ratio now, which is interesting. Whether the puts can continue to catch up on the calls remains to be seen. If we keep selling off, what would be interesting to watch? Again, it's not the huge put explosion you might have expected yet, but we're getting there. Let's look where we line up as well from an expiration perspective. And as you might expect, the front month, June, is wiping the floor with everything else. Everyone wants to be in very near-dated contracts in markets like this. It's understandable. We're whipping all over the place. You want some gamma in your back pocket. And so that's what we're seeing out there right now. 94,000 contracts open in June right now. It's up about 5,500 from this time last week. Then we fall off a cliff to September, number 2. 37,000 contracts opens up about 1,000. And then December is number 3 with about 26,000. That's up about 600 from this time last week. Let's get out to the size positions. What are the big open positions in Bitcoin options right now? Let's find out. Let's go to number 5. And how long have we said that it's been, the par and even the 200,000 strike towards the end of last year were dominating the OI in Bitcoin options. And we kept waiting for what we call relevant strikes. We have started to see some of that now with the 20s and 25s coming online. And this week, breaking into the top 5 for the first time that I can recall since, of course, the massive run-up to 30,000 is the 15,000 strike, back in the top 5 after a long hiatus. 9,700 contracts open. That's, again, a newcomer to the top 5 this week. Then number 4, we get back to the, shall we say, optimistic paper, the 60,000 strike. There's 10,000 contracts open there. That's unchanged from this time last week. Number 3, the 40,000 strike. In fact, the middle of our top 5, all pretty much unched here. 40,000 strike, number 3, 11,000 contracts open there, also unchanged. Number 2, the 25,000 strike, a strike we just broke through this weekend, or just today, actually. 13,000 contracts open there. That's unchanged. And the number 1 size position in Bitcoin options right now, again, reflective of where we are in the market, the 20,000 strike. That has 15,000 contracts open. It's up about 2,000 contracts from this time last week. So that's where the biggest change has been on the 20,000 strike, which, again, not exactly surprising. We are starting to threaten that one now. So interesting things afoot. So we have a 20,000 strike at number 1 and the 15,000 strike breaking into the top 5 for the first time in quite some time. Read into that what you will out there, listeners. Also, from an action perspective, there's a whole heck of a lot of paper going up out there, especially today. Today's the big day. This is blowing the doors off pretty much anything we've seen. I'm looking here really quick. Anything we've seen this year. Prior to today, the biggest day we've seen from a volume perspective this year was about a month ago, the May 11th, the big sell-off when we broke through 30 grand. And that was a big deal. We saw 46,000 contracts going up on Deribit that day. We've already eclipsed that, 47,000 contracts. When we kicked off the show, there's even more up now. So today is going to be the most active day by far on Deribit from a Bitcoin options perspective. Let's go out to CME land, see if they are keeping up with the Joneses, if they are following suit. Remember, some trailing data out of CME, right? They report their most recent day for Friday, so they don't really have a lot of numbers yet for today. So it'll probably be a different story when we look at the show this time next week, looking back. But the most recent day, Friday, there was some action. Again, Friday wasn't a quiet day. About 90 contracts going up in the big Bitcoin options, which, again, 5x multiplier. That's a lot cheaper than it was a few months ago, but still, that's a big, beefy contract. So 90 contracts going up, the OI ticking up to about 2750, up about 300. Similar story for the big futures. We saw 9,000 going up on Friday, so nothing really to write home about there. The OI also staying about the same, up a couple of hundred to about 11,600. So no big moves on the big contracts. Just look at the little stuff and see what's going on out there. And the micro Bitcoin futures are putting up some numbers on Friday, 14,300 trading there. And the OI is up about 4,300 as well to about 18,600. So a little bit more action out there. We'll have to go see if we can pull up those numbers for today and see what's lighting things up out there. As we keep on rolling, it is time to explore the altcoin universe.
It's time to move beyond Bitcoin and find out what's moving the rest of the crypto marketplace. It's time to boldly venture into the altcoin universe.
All right, everybody, welcome to the altcoin universe, the portion of the show we explore everything outside of the big dog that is Bitcoin. Except for right now, we break down the top 10 from a market cap perspective. Obviously, a lot less market cap to be found this week than there was even last week. Let's start at the bottom and work our way up. Number 10, still Dogecoin. Man, it's about a nickel now. Wow, how the mighty have fallen. Well, it never was that mighty, but got up about, 75 cents right around the time of Musk's infamous SNL appearance, down to a whopping nickel right now. That means the market cap about $7.4 billion. That is all it cost you now to break into the top 10 in market cap right now. In fact, I heard an interesting stat coming into the show today. The global market cap for all crypto, not that long ago, was around $3 trillion. And coming into right now, it's about right around one. So we've seen quite a lot of market cap fall by the wayside or go the way of the dodo over the course of these past few months. Number 9, Solana, another one that has been beaten up quite a bit, over 100 not too long ago, about 28 and a quarter when we ran these numbers. That puts it at about a 9.6 billion market cap. So again, even Solana below the 10 billion level. So that means 10 and 9, both of them below 10 billion in our top 10 market cap. That kind of shows you what kind of environment we're working with here, listeners. You got to go all the way to number 8 to break the 10 billion level. It's XRP with about 15.3 billion. Number 7, Cardano, 16 billion, pretty much exactly. Number 6, Binance USD, 17.6 billion. Number 5, good old BNB with about 37 billion. So now we're ticking up a bit. Number 4, USD coin, 54.3 billion. Number 3, it's Tether, 72.2 billion. Number 2, it's ETH. Man, ETH looking a lot lighter these days, 150 billion. And number 1 with a very light bullet, Bitcoin, 451 billion. So it's not that far from where ETH was not too long ago. So, wow. Interesting stuff here. Below $500 billion for Bitcoin right now. Let's get to the number 2 out there. Number 1, a lot of your hearts. That is ETH. And man, ETH looking a lot lighter than it was last week. This time last week, 1856. Coming into the start of today's show, 1243. Off over 600 handles, about 612 handles from where it was this time last week. It got as low as about 1192 this morning. We saw the kind of aggressive sell-off, concerns about all these issues on some of the venues, Binance, pausing withdrawals, all these things kind of just cascading to cause a lot of fear in the crypto space right now. ETH vol popping. Unlike Bitcoin vol, though, Bitcoin didn't make a 2x. ETH doing a 2-banger here. 147 coming into today's show. It was 72 on our last show. So a lot of vol, a lot of froth in ETH options right now. Skew-wise, again, similar story. It was negative last week, negative 6.9, but blowing the doors off that this week, negative 31. Man, that's a lot of negative sentiment / concern out there in ETH land. Let's see how the OI is lining up. And surprisingly enough, the calls outpacing the puts yet again on a very down week. The calls are over 2 million open now in Deribit, almost 2.1 million. It's 2.09 million to be precise. That puts them up 290,000 contracts from where they were this time last week. The puts, 742. They're up only 51,000 contracts from this time last week. So that means we are more than 2-to-1 calls over puts in ETH land right now, which is kind of interesting. Past is prologue. A lot of that call paper is buying, but I'm sure there is some overriding going on out there as well to kind of eclipse that. But still, wow, that's a very strong call to put ratio still in ETH out there. The biggest volume, just like we saw with Bitcoin, is today, even though, unlike Bitcoin, today is not, at least so far, is not the most active day for the year. That still goes back to May 11th with 461,000 contracts. Not quite there yet. It was 391,000 contracts when we kicked off the show. But hey, by the end of the day today, we could easily have eclipsed that number. So I'm going to go out on a limb and say we're probably going to have a new record for this year by the end of today as well. Let's get out to the expiration cycle. Let's see how you folks are lining up from an expiration perspective. And like we're seeing in Bitcoin, it's all quarterlies all the time. June blowing the doors off, 917,000 contracts open in June, up 133,000. Again, people want to have near-dated contracts when things are whipping all over the place, so that is not surprising. Number 2, the September contract, 604,000 contracts open there. That's up 90,000 from this time last week. And number 3 is December, bringing up the rear, still with 425,000 contracts. It's up about 13,000 from this time last week. Let's go out to the top position, see if we can find any interesting shoots, any rays of light in there that may perhaps shine an interesting new light on what's going on out there in ETH, because we are seeing some new strikes pop back into the top 5 in Bitcoin land. Is that the case in ETH as well? Doesn't seem like we have any newcomers this week, just a little bit of adjusting out here. Number 5 in ETH this week is the 6,000 strike. That's 126,000 contracts open there. It's up about 2,000. That seems in the distant rearview mirror right now, but hey, anything could happen in the world of crypto. Number 4, 3,500 strike. That has 138,000 contracts open. It's up about 14,000 from this time last week. Then we get some of the more optimistic stuff again. The 10,000 strike is number 3 with 148,000 contracts open still. It's actually up 1,000 from this time last week. Number 2, the 5,000 strike. Didn't seem like that was that far out of the realm of possibility not too long ago. Now pretty distant in the rearview mirror as well. 5,000 strike has 165,000 contracts open. It's up 14,000 from this time last week. And number 1 is the 4K strike with 200,000 contracts open. It's up about 12,000 from this time last week. So it's not all vestigial paper left over from when we were north of 4,000 listeners. There's new positioning going on even this week. 12,000 new contracts setting up there. So people are still trading the 4,000 strike up there right now. What do you think they're up to? Overriding, buying, probably a wee bit of both. But again, if past is prologue, crypto folks, they like a little bit of their upside. So they're probably buying a lot of the 4,000 strike. Also perhaps spreading it off with the 5,000 and hopefully the 6,000, even though not a lot of new positioning there this week. So intriguing stuff. Let's see if there's new positioning out there in CME land on the ETH front, and decent paper actually for the big ETH futures, almost 9,000 going up on Friday. I haven't seen paper like that out there for some time. Usually it's 2,000-3,000 contracts. So 9,000 is a pretty decent chunk. The OI also ticking up a couple hundred to about 3,500. Micro ETH futures, that's where a lot of you guys want to play. We saw almost 19,000 going up last Friday, so a pretty active day on the micro front as well. And the OI ticking up about 4,000 contracts to 31,000 contracts open on the micro ETH front. Let's roll through some more of these altcoin, then we'll get to some of our questions of the week and get out of here for this week, listeners. XRP, our old friend we were just talking about, down to about 31.8 cents. It was 39.6 cents on last week's show. It's down 7.8 cents. Good old Doge, like I mentioned, hovering right around a nickel, 5.5 cents right now. It was 8.1 cents on our show last week, down about 2.5 cents. So that's a big drubbing for Doge. A Litecoin, last show, $64 this week, $44, down about 20 bucks. Man, that's a lot to come off Litecoin. Cardano, same deal, 47.7 cents this week, 59.9 cents last week, down a little over 12 cents on the week. Polkadot, 9.5 bucks last week, 7.15 this week, down about 2.34. Solana, they have come for this one, $42 last week, 28.5 bucks this week, down 13.5 bucks just this week. And of course, if you've been paying attention to Solana, I know a lot of you have, it was north of triple digits not too long ago out there. And then why not Shiba Inu? It was 0.000011 on the show last week. This week it is 0.000008. Adding decimal points, never a good thing out there in the land of Shiba Inu.
You've got questions about crypto. Who doesn't? It's time to find out the answers to your crypto questions.
All right, everybody, welcome to the crypto questions. And, it's a bit of bloodletting on the screen out there this week. So we thought it was an interesting time to bring back this old chestnut, maybe adapt it a bit for the era and the pricey level we find ourselves in right now. But quite simply, like we mentioned at the top of the show, we saw Bitcoin breaking 25,000 and now 23,000 this week. So we asked you just a couple of weeks ago, what level Bitcoin hit first, 10K or 60K? We amended that this week, given the price action out there right now. And so we're going to make it a little bit easier for you bulls 10K or 50K. So it's effectively going to now more than double. It was around 25,000 when we were planning this. So effectively double, or is it going to get cut more than in half down to 10K? And right now, listeners, it just went live during the shows. This is pretty much a flash poll right now. But right now, it is pretty much close to split, about 57.6%. So 10K just edging it out. 42.4% saying 50K. Get over there to @options if you haven't voted already. We want to hear your votes on this. I have a feeling this is going to be a contentious, hotly debated issue out there. We had guests very recently, like Mr. Russell Rhodes, coming on our network and saying he's pretty much washed his hands of all crypto. He doesn't see the use case for it anymore. He thinks it was a bubble and its time has passed and he's out. Other folks like Dan on our Options Bootcamp show saying he thinks 5 years from now, the opportunity is best in crypto versus other assets. So kind of depends where you hang your hat, what your feeling is out there. But we want to know your thoughts right now. 10K or 50K. Get over there to @options and make your voice heard. All right, listeners, that music means we've come to the end of another bloodletting journey through the world of crypto this week. I want to thank our guest, Ivan Zhang, joining us in the crypto hot seat this week. Check him out over there at PennyWorks, P-E-N-N-Y Works, all one word.com, or give him a follow on Twitter at PennyWorks is the place to find them. We'll be back, of course, throughout the week. Tomorrow for our pro members, we'll have a great pro Q&A with international vol analyst and also international author extraordinaire, Mr. Ash Vyas, joining us for the first time in the hot seat. That should be really fun to answer all your questions. He's a master of debunking dubious correlations. If you have questions about different asset classes, maybe crypto, an important one, and its correlation to the broad market. Of course, volatility, that's kind of his bread and butter, vol research and vol correlations. Get them in now. Should be a fun one. Back, of course, on Wednesday, double dose of Options Playbook Radio and Options Bootcamp for all your educational needs. And we know for a lot of you listening to this show, there are legion. We always can learn more. So Options Bootcamp, Options Playbook Radio. Thursday, the Option Block Episode 2. And This Week in Futures Options, a show where we do touch on crypto more frequently than not these days. So check that out if you're listening to this one as well. Friday, Volatility Views, and then Options Oddities after that. Then we're back again next Monday, another episode of the Crypto Rundown. I say this all the time. I mean it doubly for this week, listeners. Stay safe out there.
This program is brought to you by Genesis Volatility, also known as GVol, home of institutional-grade crypto options analytics. Whether you're trading CeFi options or DeFi options, cryptocurrencies move. Use GVol Analytics to analyze implied volatility, model realized volatility, structure positions, and unlock alpha. For more information, visit gvol.io. That's GVOL.io. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.